And we're back Tuesday, June 3rd, with Glenn Freibarger.
Good morning, Frank.
How's it going?
It's good. Dad's away, so they let us come back on here. Woohoo!
Who is Dad? Pete.
Yes.
Pete is in foggy London town.
Oh, yeah, HQ.
HQ. What do you think he's doing?
Man, just some important things.
Very important
Just
stuff.
like so critical.
You couldn't even imagine.
I know. I can't even fathom
it has to be so important because this week we have tastyfx has an integration.
Yeah.
That you've been jumping on a bunch of different shows and talking about. Why don't you give everybody like the 30 to 60 second update on what the heck's going on? Because they've been seeing your face on a lot of shows. I don't know if they're happy or sad about it.
Early reviews.
They're probably wondering why.
Yes, a lot of people wondering why you would possibly see me on Overtime on with my good friends Nikki and Mike on Options Trading Concept Lives, and that's because we now have tastyfx products in the Tasty Trade platform. So if you have a Tasty Trade individual margin account, you can now open a tastyfx Forex account and through the same platform have access to over 80 spot FX pairs, the currency pairs that we tout daily here on Forex Focus that we usually show you on the tastyfx platform.
Sure.
Now can access right through the Tasty Trade platform. So.
And actually, why don't you? They tried to bring up the platform there, and then they were like, "Nope, that's the tastyfx platform."
Correct.
Why don't you really quick get into the Tasty Trade platform and bring up your tastyfx? Show everybody how easy it is. And if you want, if mine's already in there, you can just go into that. It doesn't really matter.
I don't know where yours is actually showing up. Let me just log in here real fast.
But yeah, it's pretty exciting times here to be in the Tasty universe, but it is a so not only do you get the 80 pairs, but you're getting also and maybe we can bring it up now because this is the Tasty Trade platform. You also are getting a different piece of technology. Is that right? Because it's not just like, oh, I search the symbols in here and I interact with them the same way. You are tastyfx is separate but affiliated entity, and also with those pairs you get a different software, a different look and feel to your trading as well.
Yeah, this is V1 of the offering for sure. Definitely making optimizations as we continue to integrate these platforms.
Wow.
But
you're really getting good at the whole song and dance. It's the first iteration, so if you have complaints, we are optimizing.
Yeah.
But
you're absolutely right.
But it's cool. I know that you say that because it's like, if you're not happy that you can't access the Forex pairs in the Tasty Trade platform, this is V1, who knows where it'll go, whatever. But I think it is a plus and a cool thing to interact with the FX pairs in a platform that was made for Forex trading. In the U.S., there's literally, I can count them on just two hands how many Forex providers there are here in the U.S. tastyfx is one of them.
Right. And
they have back-end and front-end technology that is really made for this Forex trading. It's a cool platform to have access to on top of the pairs, and you've been talking about all the different leverage and carry trade and everything else.
Yeah, a lot of distinct features for and possible value adds for adding spot FX to your portfolio. But you're absolutely right. I only call out the whole V1 thing to hammer home that point that this stuff is set up for cool reasons, and one of those is just navigating over to the tastyfx ecosystem is when you populate the trade ticket, the charts you're getting are tastyfx charts with all of their charting capabilities. We've got, our I don't even know how many 20 plus studies and technical indicators that you can add on here. A lot of cool things you can do, visual ways to manage your positions through these charts, adding take profits, stop losses, your limit orders. All of that fun stuff can be done directly through the chart, which is a really cool thing. And of course, we've got our tastyfx is
A lot of
near
data.
40 years of data here. So a lot of cool things about this integration. And so definitely check it out if you haven't already.
And then, of course, if you don't care about anything tech-wise, you just want the access. The 80 pairs is cool. All the different cross pairs, not having to mess around with like a pairs trader for your currency cross pairs. I can't imagine. Maybe there is some kind of course, our mutual friend Peter Klink, he's one of these guys that like you get him a gift or like anything, and it's just like it can't be like a nice thing ever. He's very smart, very nice guy in his own way. But it's like, oh, Klink, like, have you heard about the tastyfx and tasty trade integration and everything? Like, what do you think? Are you looking at anything? And of course, his first question is, yeah, I want to trade the ruble. And it's like, okay, well, Klink, we don't have that. Well, everybody else have the ruble? No, Klink, the other people don't have the ruble.
Nobody has
it's
this
so
cool
liquid
toy.
and volatile that like U.S. regulators really don't want people promoting retail traders to access it.
Right.
So like,
What's the closest thing to the ruble?
yeah, of course. Next question. How do I get ruble exposure?
You sure? Nobody will
Klink,
let me get ruble.
The dollar-yen market is less than a pip wide. The euro-dollar market is less than a pip wide. No commissions, and I think it's 2% margin requirement. That's a cool thing too.
Yeah.
Or oh my gosh, look at you can trade like Aussie CAD, 2 points wide, no commissions, and that's I think a 3% margin requirement. Is that right? You know this stuff better than me.
Yeah, no, that's at 3%. You're absolutely right, and I think this platform, the way we've structured this watch list, makes it pretty clear to someone stepping into Forex markets for the first time. There are 80 plus currency pairs. I think it's 82 or 84. But we do a good job of letting you know what markets are tight.
It's called curation. But of course,
we've curated the watch list.
But of course, Klink would scroll just to the bottom.
Exactly, and look for where.
Oh, well, that
where
one's.
is this?
Why is pound South African rand 300 points wide? I don't like that.
Couldn't get it any tighter.
Okay, man. Euro Turkish lira. I really wanted to trade that, but you guys have it at 2,600 points wide.
No, I can't.
I don't know.
Still could.
I don't know if anyone trades that, Klink. But anyways, it's some cool stuff. Very exciting. I know you've been doing a lot of good work, jumping on different. Your new friends Mike and Nick.
Oh yeah.
You didn't even shout out CVZ.
CVZ
And
D-Rat.
Yeah, Young Ratigan. D-Rat.
I don't know. Is he gonna hit me for that? Is that?
Well, he's in a different continent, so.
Oh, okay. Nice.
It would take some time. You have at least 12 hours to hide.
No, all great guys. And Chris Vecchio.
Why haven't you been on
excited.
the Liz and Jenny show?
I was on it like 2 weeks ago.
Oh.
It's
I'm
only
just
Tuesday.
Saying, all great
it's
guys.
Tuesday.
What about why haven't you been doing any shorts with Vanetta?
Don't worry. My world tour, everything is curated. Everything is planned.
Gotcha. Okay. Yeah, you and your
Dotting my
new
T's, crossing my
At one
I's.
point in my career, I had an experienced producer show me the ropes. I know now you have Beth. I had Jules Weinstein.
Are you drawing parallels between them?
Well, I got here because of Jules.
Okay.
And so you just have to make sure that you take, full advantage of the resources afforded you. And I want you jumping on all the different shows.
Understood. I think Beth can attest. I haven't said no.
Watch it, Frank.
But there's plenty of cool stuff going on this week in Forex markets. I know you want to talk about the ECB in just a second, but already seeing some reversals.
Oh, yeah.
Yesterday, Eurodollar, Glenn, getting up to 114.50. If you don't mind pulling up the chart. Monthly's not going to help us. Already in trouble. Yeah, it got right up to 114.50 yesterday late afternoon. And then everything, I don't know if you noticed this. I know you and I, given that This is not financial advice by any means. It is just personal information. Given that a lot of our money is in crypto money, and we're checking this constantly, there was a huge bounce in a number of assets last night at like 4 or 5 o'clock. I would imagine that's when maybe some Trump and Xi information started to come out. But you're seeing a pretty simultaneous drop here in the euro, rise in U.S. dollar, as there was a fair amount of weakening yesterday, all the way back under 114.
Yeah, I mean, yesterday we were trading through 1-month highs, at least, dating all the way back to that run up near the end of April.
Yeah.
And now, yeah, pretty unanimous across the board. Dollar buying, looking to this.
Yeah, good, nice comeback with the dollar Swiss franc. Yeah, a little dollar yen move here, 143.
But yeah, you're definitely seeing a lot of movement off that Asia Open. Not as much when London came in, at least against the yen. This is your boy, the franc.
I don't know why. Yeah, maybe it's because it's called franc.
No, it's.
But I do gravitate towards this one a lot. I mean, that carry trade is gotten interesting as Switzerland has really annihilated their interest rates in the last year. And also just like 82 has been such an interesting number. Got all the way down to around 81.60 there, and a nice bounce. Like you say, throughout, it's right around Asia, starting to wake up and get into the market there last night here in the U.S., and now bouncing back above 82. And now, if you wouldn't mind pulling up the monthly chart, this is where it really gets interesting, because, yeah, this 82 is a very interesting number, going back to just a couple of points in history where we've broken below this price and not stayed below it for very long. I mean, you go back to that 2011 data point, Glenn, and you're down there in that 80-cent region for a month and a half, 2 months, and then it's a violent reversal there back to 90 cents. I don't know if we're quite in that environment, but you go back to 2023, 2024, plenty of examples of breaking down below 85, right around there, and then a bounce back up to 90 cents. Like I say, I don't know if one, this is going to be where this market bottoms, or two, where the reversal takes us. But I love myself a historical extreme, and also if the carry trade is in the dollar favor with that extreme, with the dollar being low, interesting potential contrarian play here. But of course, as we've seen as recently as 2 months ago, can definitely break below 82 cents.
Yeah, I'm quite surprised that when we break it down on the monthly basis across 2024 at least, very clean moves, just up and down, because we started talking about these historic extremes, quoting the exact same levels in early March, and this violent move down to 82. If you had this kind of historical context, it hasn't exactly been smooth sailing, not quite the clean bounce that perhaps we see over a monthly basis. So definitely some value there for position traders with the carry in your favor, but not a lot in terms of momentum right now.
Yeah, absolutely. I mean, you look at the fact that now here in this daily chart, since that violent move in early April, and that's when dollar got spanked against everything, not a huge bounce. And it's same with that euro dollar story too, where it's like, oh man, it's a nice 50-point rally today in USD over euros, but we're still 113 half.
Right.
Like it's not like, oh, the dollar and the euro are really kind of fighting each other here between 108 and 112. It's like we're still hugging some extremes that, of course, could get more extreme, but I do like leaning against a multi-year extreme if I am looking for that contrarian dollar play. But yeah, if you're a trend follower, obviously plenty of dollar bounces to get short that dollar into. It's nice that we've had some back and forth here as opposed to the one-way action that we had in early April. But I want to make sure we have time for, I know you put together a nice little segment that's very time sensitive.
Yeah, I put together some slides if we want to cut over to those. We've got definitely a heavier economic calendar this week. And this Thursday, we've got an ECB rate decision with a 25 basis point cut widely expected. So begs the question, will this rate cut, as forecasted, finally take down euro dollar? Because as you just called out, euro retaining a lot of strength here against this dollar market.
It's an interesting market for euro dollar. It has been for the last 3-4 years, almost nonstop. But where we find ourselves going into what is supposed to be, the market is indicating, could be yet another ECB rate cut, is in an unusually strong euro market for the last 3 years.
100%.
114 is right around the highs that we've seen going back to, at this point, there's really kind of the pre-pandemic environment and then the post-pandemic environment for a lot of these Forex pairs. And of course, if you want an example of that, take a look at dollar yen. Euro dollar, similar, that it hasn't been able to really sustain activity back above 113, 114, 115 since the post-pandemic economic boom that we saw, rise in inflation, rise in interest rates across the globe, but U.S. really leading the way, a lot of U.S. dollar strength on the back of it. You know the story. And you would think, okay, well, if the U.S. dollar got all this strength on higher rates, and we've been talking rates the last couple of years, then how is this euro hanging in around 114 when the ECB has been cutting more aggressively than the U.S., and another cut is due to come? And it's because the context matters, Glenn. And we're in an environment right now where interest rates are not the number one thing. It's an important thing, but until the geopolitical risk in Europe subsides or ratchets up again, whatever's going to happen, as well as the trade wars that are going on between the U.S. and almost everybody, those calm down or ratchet up again, the interest rate story is kind of a second or third tier story at this point.
I agree. You beat me to the punch on a couple things here.
Sorry.
That's all right. You know all things. It's very impressive. Just one headline and you knock it out of the park. But just checking in on what we've gotten already. Early this morning, we got an inflation statistic. May inflation coming in for the euro area softer than expected at 1.9%. They were expecting 2%, so not the biggest miss hit. We just covered what that euro market looks like. Not a gigantic leg lower, but some momentum already this morning.
Still good
off of this. Off of this inflation number.
Still good for and all of that being said, the trade war talk has been, if something comes out, that can be, 70, 80, 100 points, 100 points plus in this euro dollar market. If we saw plenty of the stuff around not only the geopolitical risk maybe subsiding in the last couple of months between Ukraine and Russia, but also the euro area ratcheting up its development of defense, and that both those stories coinciding for many 100, 200 point moves in the euro dollar market. I appreciate that you bring this up because this number coming out softer than expected has correlated with this morning about a 50-point sell-off in euro dollar. So again, it's not that inflation and interest rates don't matter for this market at all. It's just like I say, the context, it really matters. When inflation and interest rates were the only story, go back to, you can see right here, that would have been 2022 and the start of 2023. No one cared about employment data, or some of these other things that they just fall by the wayside. This stuff still important, but just not as big of a mover as some of the other stuff currently on the table.
I agree, but this will definitely factor into the commentary later this week with the ECB
100%.
because I think with this trade backdrop, a lot of expectations around it'll trickle into inflation. This is where it'll really hurt a lot of markets, and so for the time being, at least not any EU-US trade tensions not playing through into these inflation statistics thus far. But what do we have coming for us from the ECB? They're set to cut rates for the 8th time in this cutting cycle. Their key deposit rate.
Little cuts.
Death by 8 cuts.
Holy smokes!
Yeah, they're
8 times you guys had to meet to get from 4% to 2.5%.
Slow and steady wins the race, my
I guess
friend.
so. Yeah.
Now they're at 2%. And while this move is largely priced in, I think a lot of the expectation will be around. There's only one more rate cut predicted for the euro area this year. So
the market thinks the bottom is in.
correct. Cutting now,
euro
pausing
rates.
one more, and that more or less aligns with kind of where the U.S. is, with only 2 interest rate cuts expected for the rest of this year. So. What this does, you nailed it earlier. Rate differential is not really a factor thus far. But my 2 questions for you,
Not taking questions.
is it kind of, is there a nominal aspect to it? Like, when interest rates are, when the differential is less than 2%, there's no real carry trade opportunity there. When we do start to get more than 2%, do you see that play into these markets as we've seen kind of with that dollar franc in certain times and definitely in that dollar yen? Does the actual nominal amount of the differential start to matter, or like you called out earlier, does it just have to be a low volatility environment for this to be a headline driver? Because there are so many other pieces at play right now in terms of geopolitics and
I think
trade tensions.
if it's going to be one, it's definitely the latter. I don't think that there is like, a lot of people will look at like real interest rates, for example, and be like, if real interest rates get like above 1% or like into negative territory, then like the central bank has to act at that point. I don't think that's the case here. And honestly, I would take your dollar franc example to say that like that band has been expanding. The difference between Swiss rates and U.S. rates has been expanding now to, I believe, 2%, maybe 2% plus. And the dollar franc is at a rounding error from decade lows against the franc. And so it's not even like able to, like we got out to 2% US rates on top of Swiss rates. And so now we're going to come back from those lows, or like a lot of it, I think, is just there's so much risk in the US economy. And I don't even know if it's necessarily risk, or a lot of people would say Trump has wanted a weaker dollar. It's part of his stance that he ran on, and he is committed to weakening that U.S. dollar. And until, I don't know if you want to call it fear or volatility, or that story kind of comes to an end, the interest rate piece is, in my mind, only going to be good for, 50 point, 100 point, whatever type of moves until, like I say, that this could get to another level where the trade talks and the Trump dollar weakening and everything takes us to like, okay, now we're trading 115 to 118, that kind of territory. Or the alternative to that is all of that risk kind of comes out. Trump and his, his turmoil with Powell and turmoil with different countries over trade, that gets alleviated. And then I think you might see this euro dollar market move back down to that 105 to 110 range. And then you really see the differential between interest rates being the main factor. But as long as we have that headline story that has not been resolved since it got on the table in February, it's hard for me to say like, if the euro area, even gets down to 1% for some reason this year, and the Fed here in the U.S. stays 4% bid, I don't know if that takes this Eurodollar market down to 110 or 108 or 105.
It does feel like it's more on the dollar side,
For sure.
in terms of flight from U.S. assets as a whole.
The pound is 135. The dollar yen is at its lows around 140. Like until that dollar, that U.S. story comes off the table, this piece is, in my mind, maybe only going to be good for 50 or 100 point one-off moves that
Not
just
a recalibration.
might slightly recalibrate where the next big move comes from the trade talks.
Well, there you have it. A lot to consider. This European Central Bank meeting, maybe not as heavily weighted as those prior, but definitely a lot to look forward to this week in terms of price action and economic events. That'll do it for us today on Forex Focus. But stay tuned for Tom, Tony, and Vanetta up next on Tasty Live.
Global markets never sleep. Explore them with Forex, now available on tastytrade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it